All right, everybody. Thanks for coming to us today on Real Estate Success Series. We've got Tim Bratz here today. Tim bought over 4,500 apartments. We're going to talk about his journey before he was doing this, how he got into this, and what's his life look like now. How you doing, Tim?
Good, man. Excited to be here, bro. How you doing?
Good. So we met at a mastermind group in New Jersey. Joe Evangelisti was running an event. My business partner thought it was crazy to spend $5,000 for 2 days, $2,500 a day. And it was worth every damn penny. I would never have known you and a lot of other great people from Mark Evans's group. So my tip before we get started, invest in yourself. There's never too much. So how you been, man?
Agreed 100%, man. No, dude, I think that's one of the biggest takeaways. You know, I get a lot of people who hit me up on Facebook and social and Instagram and social media asking like, dude, how'd you get to where you are? And I can tell you, you know, the long and you know, painful journey that it takes to try to figure this stuff out on your own. And that pivotal point, dude, for me is when I started attending masterminds, when I started plugging into those events and, you know, just plugging around people who are actually doing things, right? And you find the more the event costs, the higher the quality of the people are in that room. You know, when I was going to free events, guess what, man? It was a bunch of people handing out cards for lotions and potions and juices and shit that they were selling, right? When I started going to $20 events like the Real Estate Investors Association, it was about 97% of the people in the front of the room had never done a deal, and there were 2 or 3 people standing like this in the back, all closed up, because they were the only ones doing business, and everybody was trying to leech off of them. And then I got invited out to a mastermind and dropped 5 G's for a 2-day event, and there were only 15 people in the room. And I realized, man, when you ask for 5 G's, it keeps the dipshits out, right? And the 15 people who are doing deals in the big room are in that little room. And then you get one-on-one time, you get some FaceTime with them, you can start building relationships and get their insights and get their perspective on what they're doing in life and what they're doing in business and how they catapulted to their success. And dude, that to me, it took my business for like on this hockey stick trajectory where it just started going up, because I had access to their resources. They knew who the good CPAs were, who the bad CPAs were, right? They knew who the good insurance agents were and the bad insurance, the best mortgage brokers, the best title attorneys, the best, like, of all that stuff. They'd already been in the game for 20, 30, 40 years, and they knew the best ones. And I was able to then latch on to those relationships and jump into those immediately. They're private money investors that took them a decade to develop a relationship with. Hey, you should meet Tim and lend some money to him. And all of a sudden, that trust that they took a decade to build with that private money investor was instantaneously conveyed to me. And so where else can you get that, man? You can't get that anywhere else in the world. And sometimes you got to pay to play.
Yeah. Reduce mistakes, eliminate mistakes that you didn't have to make because they're sharing you how to eliminate it. And number 2, speed. Like, you know, with you and I, we're trying to compress time, and every single day, how much can we get out of a day and how can we grow a business as quick as we do? And you look back at that group, I mean, there's so many successful people who came out of that group and so many good relationships. At that point, I remember you and I were doing different things, but it's cool to look back at 5 years ago. I look at life and say life is every 5-year cycle. And at that time, I think you were in property management. Were you buying investment properties then, or you were buying some? Or what was your life like?
I had a turnkey business back then. And so I was buying things for myself. I bought my first property in 2009 and just, you know, sucked at real estate for 8-9 years. You know, organically, I built up a portfolio of over 100 doors. So I wouldn't say I sucked at it, but what's that?
Why did you suck at it? Like, what
I say that, and the reality is I just failed a lot, right? I got kicked in the nuts by contractors, by tenants, by municipalities, eviction courts, by lenders bailing at the last minute. Like, dude, I went through all the learning curves. And so that's why I say I suck. It was like really, really difficult back then. If you can get through the hard phase of business, then all of a sudden this compound effect occurs. And again, you separate out your best investors, you separate out your best contractors, your best mortgage brokers, your best banks and lenders, your best team members. Like, and all of a sudden, you know, you're surrounded by all these A players, and business is easier. Business is, you know, less difficult, and it's more streamlined, and you've made all the mistakes. And so now it's more profitable because you don't make those mistakes anymore. Now it's easier, right? And now those deals fall in your lap. Now you can raise $3 million in a course of a weekend because you've developed those relationships. So I think a big differentiator for people is like, dude, you just got to stay in the game. The hardest part is the first 3 to 5 years. You can get past that, shit starts getting a lot easier, you know? And I think there's a lot of people who had a lot of success over the past 2 years just because the market has been easy for people to make money because there has been so much money being thrown around. I think there's going to be a reality check over the next 18 to 24 months. It's going to separate, the big boys from the little ones.
Were you doing a lot of things back then? I want to talk about this next. And are you doing less things now? I find the less we do, the deeper the hole, the more money there is. I'm a hick from Western Pennsylvania. The hole, the digger, the deeper the hole, the more likely you're going to find coal, or the more likely you're going to find natural gas. My one boy hit for $1 million a month, right? My family has some natural gas, nothing crazy, free, a couple G's a year. But the deeper the hole in life, normally you can build a bigger business. Were you spread wide then, and then you went deep after we met, or what was going on in your life?
Yeah, I think, for me, I remember I look back at my goals and stuff and just kind of review on some of those things. And I reset my goals every year between Christmas and New Year's. And I reflect on old goals. I look at my current goals and I think about how, what do I really want? And back then, dude, I wanted this fully integrated real estate, just gargantuan business. I wanted the brokerage. I wanted the management. I wanted the investment side. I wanted a fund. I wanted the construction. I wanted all of it. I wanted everything. And then as soon as you start one business, you're like, oh shit, each one of these is its own business, right? And each one needs its own COO and processes and procedures. And I think from a scaling standpoint, dude, I would just stay in your lane, right? I would stay in your lane. And I just said, hey, the money is in the investment side of things. So let me just focus on being the investor. And I had the turnkey business, I had the management company, and then we started passively investing in some apartments. And kind of sponsoring loans. So I was still a general partner in a lot of those. And I just realized all my wealth was coming from the apartments, and it was like 10% of our time. And so I was like, what if I just pivoted all my resources to just focusing on that? And that's what really gave us the trajectory to scale the way that we did so quickly. And now that we have a big business, now that we have the revenue, now that we have the team built out, now I'm vertically integrating a lot of those other things that I wanted from before. So now we've got in-house management again, right? We third-partied it out for a while we figured out what we want to do from an asset ownership standpoint. So now we're like, all right, now we can develop our in-house management. So that's in-house. Now we're developing in-house construction, and we're handling all that. The in-house supply side, so that way we're not subject to what's going on with supply chain and all that kind of stuff. And we're vertically integrating a lot of those things. I don't have an in-house like brokerage, and we don't really want that. And we don't manage for other people. We only manage our own stuff. But we do have an in-house acquisitions team, right? We have an in-house dispositions team. So our team now handles all of that stuff. So that way we don't have to rely on other people to do their job when sometimes they don't do it as well as our internal team can when we have intimate knowledge of all of our assets.
When I saw you in Cleveland, one of my best takeaways from our conversation was the 10%. You said to me, we were sitting at the dinner table. You said, I realized 10% of my time was my best asset. Well, I just double down, triple down, whatever you want to do, went at that. And as you walked away from the table, the guys were talking about that.
And dude, that comes with awareness, right? It comes with me sitting back on vacation one year. And I think when you're on vacation, you get very, you start looking at perspective, right? You start looking at, you get a little bit philosophical. And I was sitting back with a cup of coffee in the morning before anybody woke up, and I was doing my goals and my net worth and trying to, and dude, I got hit in the middle of the forehead of like, holy shit, like, look at where am I spending my time? And then where am I making my money? That's an exercise everybody could do. It's like, dude, just catalog your time over the course of a week. Every 15 minutes, what are you doing? And then next to each one of those activities, put a $sign or a 0. Does it actually generate revenue or not? And then I took it a step further. I put a smiley face or a frowny face. Does it make me happy or not? And the things that made me happy and the things that generated revenue are the things that I personally focused on. The things that didn't make me happy but generated revenue, I hired people to do those. And the things that didn't make money and didn't make me happy, I removed from my life altogether.
I've been on the investor side and the real estate brokerage side, right? And most of the time, like you said, you go one way or the other. The investing side is much more money, but I love the realtor side too, and the brokerages and things like that. So it's weird, but I'm on both sides. What I noticed was when I interviewed a lot of people on the investing side, they were easy to double down on themselves and invest in process and procedures. On the realtor side, most of the time, people are trying to be the doctor, the nurse, and secretary. Not all, but it would tend to be a little bit slower on making that decision. One of the things I recommend a lot of people do is like, take a piece of paper. What do you do well? What don't you do well? Or take a piece of paper. What do you want to do? That's actually a better exercise. And what don't you want to do? And outsource all those things and look at your return on your investment that you will get by other people doing it. Like if you suck at something, why figure it out? Go find someone who's better at it. Or if it's not worth your time, go find someone who's better at it. When did you figure that out in your business and your life that you're much better with the team instead of Tim Bratz doing everything?
Oh man, great question. I think, well, I realized the power of leveraging OPT, other people's time, right? I realized that when I hired my first employee. And I remember, in 2014 was the first year I ever made six figures. And so I was 29 years old. And I went out to a mastermind in early 2015, the first one I ever went to. And they said, dude, you got to hire somebody, man. Like you're doing your bookkeeping, you're doing rent collection, you're doing maintenance calls, you're handling eviction court. You're like, dude, why don't you staff some of that stuff out? Because Tim, dude, if you're doing $10 an hour activities, guess how much money you're going to make? $10 an hour times however many hours you're doing that activity. And for me, it was just doing more, right? And I was burning the candle at both ends, doing the $10 activities and on top of trying to do $100 and $1,000 hour activities. And so it just, I was working 18 hours and just like trying to figure things out, waking up in the middle of the night, hammering out work early, staying up late, all that kind of stuff. And so for me, when I hired that first employee, when I got back and I did that activity that I just shared of where am I spending my time, I took all the non-revenue generating stuff and I put it on his plate. And I just focused on the revenue generating activities, which in real estate is typically from the investment side is finding deals, raising money, and then either you're just dispoing properties, selling them, or you're managing them. So like it's refining your operations. And so if you're not doing those three things, you're wasting your time. Like you're not doing the actual revenue generating things. And I just focused on, raising more money, dispoing deals because we had the turnkey business at that time, and the acquisition side. And dude, I more than tripled my income from 2014 to 2015 because of that. And during that time frame, I also hired my COO, and I realized, dude, holy smokes, like there's a lot of things that I'm doing that I hate doing that I was like, nobody fucking likes doing this, that other people actually like doing. Like, right? Like that other people like putting standard operating procedures together and measuring metrics on people's performance and, working on spreadsheets and data and analytics and all this other stuff that I couldn't stand doing, but I like doing the sales side. I like doing the marketing side. I like talking to people and networking. And I realized there's different behavioral types. Yep. And for every one visionary, somebody like me, there's 2 to 3 integrators, operators, COO type mindsets in this world. Yep. And so guess what, man? I can go and build multiple businesses because I just need to find those people who are really good at taking my vision and the chaos that I create and then creating order around that and actually implementing that vision. And so when I realized that those people existed and not everybody was like me, and I was like, oh man, like my COO doesn't want to get up on stage. He doesn't want to do podcasts. He doesn't want to be on social. He doesn't even have a social media account, right? So for him to do all those things is very draining for him. But him putting process maps together, right, and checklists together, and metrics in place, and KPIs, and doing those kinds of things, dude, that's a driving activity for him. So for me, that's a draining activity. And it's a driving activity for me to be on podcasts and to speak at events and to network and create social media content. And so guess what, dude? When I'm able to stay in my lane and focus more of my time on doing the things that I'm good at and I like doing, I do more of it, which makes me even better at it. When I'm better at it, I like it even more. And same thing with him. And then all of a sudden, dude, when you take two opposites and bring them together, 1 + 1 doesn't equal 2. It equals 3. It's the the sum is greater than the individual parts in that process. And so when you realize that and you bring on A players into your team and incentivize them and compensate them properly and get them, structure it in a way where they have ownership mentality, dude, that to me is an absolute game changer.
Two things on that. So we're talking about leverage. One is too many years, Tim, I hired people that were like me. When I go to events now,
because you like to go and grab beers with them, and you like to hang out with them, and you like to talk about the same stuff with them, and that's a very typical error that a lot of us as entrepreneurs make early on. And then you realize, like, dude, I need people who are not like me in order to run this.
And when you find those people, like my life has totally changed on running businesses and finding those people, the same interests are probably not the same interests as mine. And like you said, don't want to be on a stage, want to be in the background, want to do the things we're good at, do the things that we're not good at. I would tell anybody watching this is be careful who you hire that's just like you. I like actually finding companies that interview the people and they separate me and I only get the final 5, the final 3. Because as a salesperson, I tend to like everybody. And I find that most salespeople, visionaries are horrible hires. They're horrible. Let someone else professionally does that, get you down to the 3 to 5, and tell me why you think Jeremy Bowers and XYZ is a good fit. Like that third party that changed my life, because for years, Tim, I just hired people.
I do the same thing, man. I use third party. I let them comb through it. Dude, it's again, let somebody else focus on what they're good at. You know what I'm not good at is combing through resumes and getting on the phone with people and interviewing them in person or on the phone. Like, dude, I just don't want to do it, or I want to hire everybody. And I realized that and because I didn't like to do it, I just never did it. So then it just piled more garbage on top of my current team's plate. And then it just, stressed everybody out. So using that third party, like always, when we talked about this, is finding the who to do the what, finding the who to do the how. Like us as entrepreneurs, we always want to do more. And we always say, hey, I want to do this. I want to take this on. But dude, we always put it on our own plate.
Yep.
The question needs to be, who do I need to hire in order to implement this into my business? And then you think about it a little bit more because you realize you got to pony up some money for salaries and some other things, and it's going to be an investment. And then it makes you think about it: is this a good investment or a bad investment, right? And then instead of us just kind of coming out wild west, dude, slinging from the hip on all new opportunities, it becomes a lot more pointed of what you want to accomplish. You start questioning some of those shiny objects a little bit more depth to that,
As you get older, the theories versus realities, you have to think about it differently and put a filter in place. Theory was the that you and I used to do back in the day and put more work on ourselves. Reality is that who and how, who's actually going to do that? How are we going to get it done? It's a great book, by the way. Here's a Dan Sullivan, right? I think.
Yeah.
Now someone gave me an idea this week. I said, whoa, this is a great idea. How are we going to do it, and who's going to do it? Jeremy Bowers doesn't have any more hours in a day to do that work. Who wants to do that? Who's the right person to leverage it, scale it, and grow it? Here's my part in that model, but we need to find the larger part. Who's the other person? And how about this? So someone's watching this, and we'll probably get off this bucket here next, but I want to stay on this for a second. Leverage. Get over that hurdle of I don't have the cash. I'm scared that I'm going to fail. I don't have an employee. I tell people you just need 3 months of income saved. So if it's $5,000 a month, you need 15 grand. Within 3 months, you're going to get your money back on that person, plus 100% return on that year easily. You should get 300%. What's your coaching tip to someone saying, hey, Tim, this sounds awesome. I love all your theories. I love all your ideas. But guess what, dude? I am scared crapless going into a market we are right now to hire an employee. I can't afford it. What would you say to them?
Yeah. Is this somebody who's still working a job, or they actually have a business? They're just a solopreneur.
They're a solo real estate agent, real estate investor. They're grinding. They're doing good, but they're nervous. They don't have that money.
Dude, I'd say you can't afford not to, right? Like where you need to be investing your money. If you understand that people are an investment, right? Meaning they're going to give you a return on your money, right? I realize in a lot of businesses that aren't managed or operated properly, people are an expense, right? And it's a big expense on the operation or on the operating statement. usually the biggest expense in for a business is payroll. And if these are people that you're not interviewing and screening properly, right? You're not training them properly, and you're not measuring their performance, they're going to be a liability, which means they're taking money out of your pocket. But if you screen them, if you train them, and you measure their performance, then they will be a remarkable asset to you and your business. So that's the key, is you got to make sure that you're screening, just the same way that you screen tenants. Yep. You got to make sure you're screening your employees, make sure they're competent, make sure they know what the hell they're doing, make sure you understand what their behavioral type is on a DISC assessment, or there's 100 of those different kinds of things, and making sure you have the right person in the right seat. Then training them. And this is where I drop the ball a lot, dude, is I just like, hey, all we do is solve problems. Ready? Now it's your turn. Go. And I don't train them, and I expect them to have the same understanding and problem-solving ability as me, who's been in the business for 15 years. And the reality is they don't. And you think about how many mistakes we made early on, and then we don't have patience with our employees. That's a problem. You didn't train them, and you're not having patience with them, or you're not giving them the authority to go out and make decisions. And they start bringing you every single question. You're like, why do I have this employee when I'm doing their job for them? Well, did you ever empower them to make decisions? And well, how do you do that, Tim? Dude, don't bring me a problem that's less than $1,000. I trust you to make a decision of anything up to $1,000. And then once you start building your team up a little bit more, dude, nobody brings me problems up to about $25,000, maybe even $50,000 today. Building burns down. What am I going to do, dude? Call the insurance company. You guys know exactly what to do. So I don't even hear about buildings burning down. Like, it needs to be a substantial cost in order for them to bring it to me. And so I say, hey, employees, you guys have free reign, free decision on anything up to $500 or $1,000. Beyond that, find another employee to give another set of eyeballs and another set of thought to this up to $5,000, let's call it, or $10,000. And then if it's up to like 50 grand, reach out to the COO and get his insights on it. If it's over 50 grand, then you come to me. And those numbers could fluctuate and have fluctuated based on where I was in business and where you might be in business. And so you got to empower your employees to do that. But going back to like the original question of, hey, I can't afford to hire somebody. First of all, I didn't think I could either, because I thought $40,000 a year salary, oh my God, that's, $3,500, $4,000, or $40,000, $50,000. That's a lot of money. But what I pivoted is, dude, it's not $50,000. It's $4,000 a month.
Yep.
Bro, what if all right, so hey, can you afford to make a $4,000? If you gave it 60 days and it doesn't work out, can you risk $8,000? It's not 50 grand, it's $8,000. And you're like, you know what? I guess I could. And that's a lot easier pill to swallow. And when that perspective was put on me, I was like, all right, let me go and test out an assistant for $3,000 a month. And dude, it made such a change in 60 days that, again, in the following 10 months, I made 400 grand. I had only made 130 the year before that. And in 10 months, I made 400 G's.
400
from a one assistant and joining a mastermind. Those two things is what I did that year.
Isn't that crazy?
Dude, you can't. I'm worried about a $40,000 a year salary. And you know what I was walking over? I was stepping over an extra $270,000 a year in income, net income to me, right? So it's like, that wasn't I netted for it. So it was actually, I made an extra $310,000 because I paid him 40, and then I made an extra $270,000 that year, and I had a better lifestyle.
You can actually enjoy it. Sometimes people bring you ideas. You're like, listen, I don't want any more. Like, listen, if you're bringing me more stuff, it's more work for me. I don't want it at this point in my life. Back then, maybe you dealt with it or you're not. I was going to ask you the next question is the key hire. For me, my key hire was that first assistant, like this situation.
Hands
and
down.
then my second best hire was an operational person to run these businesses. Most of the stuff, I have no idea what goes on. I do 4 things. They do everything else. And it runs perfectly. Was your second best hire the COO?
So early on, if I were to do it all over again,
yep.
I went heavily in that way. I went operations heavy, but then all the sales and all the revenue fell on my my plate. I would hire somebody as an assistant with the vision of elevating them into operations eventually. Right? Because it's easier to hire another assistant than it is to hire a COO to your business. So I'd rather have somebody as my assistant who hears how I speak, understands how I talk, understands how I think, how I make decisions, sees how I interact with different people, and they're essentially getting trained as my assistant on the operational side of things. So eventually they're handling all the administrative side and they have that type of mindset, but then I can elevate them into more of a project management role or a property management role or an operations type of a role. So that's my first hire that I would hire. And I like hiring them as an assistant, because you hire somebody as a COO, they're coming in saying, hey, I want $200,000 a year and benefits and this and that, as opposed to somebody who's willing to shovel shit and actually give it some effort for, 2 years, 3 years, 4 years, and understanding that there's substantial opportunities to grow in the business. That's more my speed of the type of people that I like to hire, is somebody who's willing to do anything and understands that there's growth potential, and they're willing to do more than they get paid for to make an investment in their future.
That's what happened to me, man. The assistant now runs the operations, that will be the COO, knows you inside and out, hung out with you in the office, worked the office, knows what you're good at, what you're not good at.
So in that regard, my operations person is my assistant, and then I will elevate them when the time comes to hire that assistant. But really, they're handling some of my, as a solopreneur, dude, you don't really have that much shit going on. I mean, you might have a lot of stuff going on because it feels like it, because it's all on your plate. But the reality is you don't have a big business yet. So an assistant can handle majority of the operational side and administrative side of things initially. And then I would go and hire somebody who can help drive more sales, drive more revenue. So whatever that role is, typically it's somebody who can either prospect or market or an acquisitions type of a role. And so that individual is the next person that I would hire, and they're going to drive more revenue, where now it's time to elevate the assistant into more operations and then hire another assistant. So that if I did it all over again, that's the route that I would take.
I didn't do that in the investment business. I did that in the brokerage business in Keller, and that business went from $200 million to $1 billion in sales in 2 years. And then in Philly, it went from startup to $2 billion in 5 years in sales. But I wasn't the beginning part of Philly, but the main line was a rebuild, and exactly how you described it is exactly what we did. And it's interesting to say that. But when I did TCS Investments, I didn't do it that way.
And especially on the brokerage side, man, like, you got one job as a realtor, is just fucking prospect all day, every single day. You are the revenue generator. And so all you need is an assistant to handle all transaction coordination, administration. The team and then prospecting for sellers.
One of the mistakes I see people do is they bring in too many doctors. I use a doctor's example a lot. They're the doctor, the nurse and secretary is the beginning of their business. The next thing they go do is they go get salespeople. Then they get another salesperson, and they have 3 doctors, but they have no administrative staff, no operations. I'm like, dude, your business is set up for failure. You literally have a bunch of waiters and waitresses, but you got no cooks in the back, and you got no one managing the office. You know, interesting how you were saying that. That's one of my biggest challenges of people trying to build teams in the brokerage businesses, is they try to build it the wrong way. I say, get an assistant, get a second assistant, and then get that next salesperson, or get one assistant, a second sales. It's interesting to say that. So we talked a lot about leverage. Let's pivot a little bit. How about on investing? I got some questions from people on investing. Is money-wise, what did you do well to raise so much money? Like, what did you do well? Can you share some examples, or what your thoughts are, like how you went from 0 to 4,500 apartments? And one of the questions I got multiple times from people is, how's this guy? They from money? I said, I don't think he is. I said, is he? No. Okay. My family.
My dad was a cop. My mom was a stay-at-home mom who volunteered in the school system and PTA all the time. So
exactly. So you had to go fire people's money. How did you raise so much money? What did you do well? And what was your mistakes?
Yeah, man. Couple different points on this. First of all, I put myself in the right rooms, right? The right rooms of people who are out there doing business, have access to capital. They have money themselves, or they'll introduce you to somebody who has money. That kind of started getting me out there. the second thing was like, I was scared to talk to people about money. You know, I was scared to talk to people about, I thought I was selling people on borrowing their money. And when you go to somebody scared and you go to somebody, when you're desperate for money, that desperation comes off, right? It's like the girl that you chased in high school, right? That you liked so much. She's like, yeah, I'm not interested because you're chasing me, right? But the girls that liked you weren't interested because they were chasing you, right? But the people who kind of gave you the cold shoulder, played hard to get, all of a sudden those relationships, like everybody's working towards that, you know? Like, as weird as that sounds, that's how it is kind of with raising private money too. And so you have to have this mentality of, you don't need to sell anybody anything. First of all, you got to know how good you got it, right? You have to understand, especially today. I was talking about my dad's in town right now. We just go and grab coffee 45 minutes ago. And I'm talking to him about, hey man, I just got my statement in the mail for my my IRA today, my quarterly statement. And since the beginning of this year, in 9 months, my portfolio has dropped by 27%. Not did I make a return on my investment. The principal value has dropped by 27%. My dad's in a lot more, he's 72 years old, so he's in all these very safe stocks. His portfolio dropped by 20%. So not is he not making a return on his investment, but he's actually losing the principal value of his capital. So we're in the, and I mean, God forbid you tell somebody to go look at their crypto portfolio. Dude, like mine's dropped by 55% or something since last year. So when you understand that we have something that's tangible, that's fixed, it is, you can see, feel, and touch it. It's a piece of real estate. It's not hard to sell somebody on investing in that. And then you tell them, dude, get your money out of the stock market, get it out of crypto, get it into something that is steady and steadfast and isn't going to fluctuate, because we're not buying speculative real estate. I buy cash flowing real estate. If it doesn't cash flow, then I won't buy it. And if it does cash flow, then that's like the lowest level of whether or not a deal will work. If the market totally crumbles, well, Tim, technically there is principal risk to that because the market could go down and values went down by 25% or 30% in Florida in 2009. Not on cash flowing property. And even if it did on paper, it cash flowed, which covered all operating expenses, which covered all debt service, which covered your investor payments, and you can ride out any sort of economic storm if you bought for cash flow. Problem is, most people didn't. They bought for speculation, and they thought the property value would go up, but they were already overpaying for it, and it went down to what it should have been. And so that's where people lose their ass in real estate. If you buy for cash flow, dude, you could ride out any sort of economic storm. And so it's not a sales process when you talk to your investors. It's an education. It's an educational process. So one of the things that I have a conversation on is, and listen, dude, there's two different ways to raise money. One's a debt, one is as equity, all right? Or there's a hybrid that's in the middle. And so we do the hybrid. So the debt side of things is like, hey, listen, I want to lend you money. Jeremy, you're gonna go flip a house for $200,000. I want 10% a year on my money. Okay, great. You pay somebody 10%. If you go and make $1 billion, let's call it $1 million on that house, the lender doesn't get any upside. And if you go broke on the house, the lender doesn't have any downside. They can still get their $200,000 back and their 10%. Very predictable, but there's no upside, no downside. On the equity piece, there's typically no predictable cash flow. So there's no real return on the investment other than speculative appreciation, or maybe not that speculative. Maybe you're forcing appreciation, creating the appreciation through sweat equity, whatever that looks like. But there's also downside risk because I'm investing as an equity partner. And if you get rich, I'm getting rich with you. If you go broke, I'm going broke with you. But like, I found that some investors, depending on where they are, their life cycle and what their risk tolerance is, they either want one or the other, but a lot of people want a little bit of both. So that's how I started structuring deals. And I started structuring it with, as a hybrid of saying, hey, let me pay you 6 to 8% on your money, predictable cash flow regardless of the property's performance. And then on top of that, I'll give you a little piece of the equity. So worst case scenario is there's a floor of you making 6 or 8% on your money and getting your money back. Best case scenario, you make 6 or 8%, plus you have equity that kicks off cash flow, refinance proceeds, depreciation, and tax advantages. And then there's principal pay down and property appreciation. And so you'll get this bigger pop down the road in 3, 5, 10 years whenever we sell or refinance the property. When you take that to somebody that has predictable cash flow, no risk to principal, tax advantages, equity upside, and principal pay down, and you compare that toe to toe against anything else that they could possibly invest in, you don't need to sell somebody. It's like Chris Rock. You ever seen Chris Rock stand-up comedy?
Yeah, I love it.
He's like, drug dealers don't sell drugs. Drug dealers offer drugs, right? Drugs sell themselves because people want to get high is what he says, right? Well, guess what? People want to make money. People want to build wealth. You don't need to sell this to somebody. All you need to do is offer it to somebody and it will sell itself. So now the question becomes is how many people are you offering it to?
Yep.
How many people are you educating on this
and
product?
How are you getting it out there too?
Dude, and so I'm talking about case studies on social media, right? I'm going through how I structure deals I got a bunch of YouTube videos. You guys can go and look up my YouTube videos and see how I structure my deals. I have I've done webinars over and over and over again. Even though I know that I might have a deal almost fully raised or fully raised, I'll still host a webinar for all my prospective investors so that way they can see how the deal's structured. And then when they raise their hand saying, hey, I want in on this, I'm sorry, it's fully committed. Let's make sure that we get you in sooner on the next one, right? And now I'm not chasing and desperate for money. Now they're coming to me, right? Now they're like, dude, put me on the short list, man. I got to get in on some deals, right? I just sold my business. I need depreciation. I have whatever, blah, blah, blah. And there's all these different reasons that people want to get involved. And so it's your job to go out there and talk to as many people as humanly possible about this stuff. And you got to not have a sales mentality, but a sorting mentality, right? If somebody's ready, great. Here's what we do. If they're not ready, I don't try to sit down and say, hey, no, you should really invest in this. This is the right deal for you. You need to do that, blah, 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 and go through this. Dude, I don't have time for that shit to make somebody into an investor who either doesn't have money or isn't ready to invest. I'm going to move right past them and next, and keep moving down the line until I find the person who's ready to go right now. And then when this person raises their hand again over here and that spot is already taken, they're not going to wait next time, right? They're not going to delay next time. And now you're training your investors as opposed to you being desperate and, going to people who are going to then dictate what their terms are to you because you don't have enough, people who are raising their hand wanting to invest with you.
Who would you say your best 3 things up front you found raising money was from?
Like who to raise money from?
Like, did you get it from events, your mastermind groups? Did you get it from emails you sent from YouTube?
I would hang out. Here's my list of A players for investors. Number 1 is any entrepreneur who's not in real estate. Really good at making money, dog shit at multiplying it.
Yep.
That's every entrepreneur for the most part. Dude, we are a hot commodity in this market right now because a lot of people are making money, but nobody knows how to save it and multiply it. And that's how you build wealth, right? So if you can show people how to multiply money, dude, they're a dime a dozen. You are a hot commodity, and you're the one that they need. They need you more than you need them. So you need to understand that. But entrepreneurs, especially e-commerce entrepreneurs and brick and mortar, like any traditional business where they're making a bunch of money but they don't know how to multiply it, if you can go in there and educate them, dude, you're going to help them build a ton of wealth. And at the same time, they're going to help you build a ton of wealth. So that's number one. Number two, people who make $200,000 a year or more in a traditional job. They either have some cash saved up, they have a 401k from an old job that they can self-direct into a project with you, and they're starting to think about retirement, and they're getting their ass handed to them in the stock market. So those are pretty good people. Those are accredited investors also, $200,000 a year and more. And then the third one would be hard money lenders and private lenders on the residential side, that then or turnkey buyers on the residential side also. Because what does a turnkey buyer want? Dude, they want to do no work, they want predictable cash flow, and they want equity upside.
Upside, yep.
That's what my investors are. They do no work, they have predictable cash flow, they get equity upside. So those turnkey buyers are great. And kind of, again, real estate investors on the residential side, hard money lenders even. Hey, well, why would I take an 8% return, Tim, when I'm lending out money at 18%? Well, because you're getting taxed on it at earned income tax bracket. So that's number one. Secondly, it's a job. You got to underwrite a deal in order to get paid again. Thirdly, there's no real long-term wealth building. And I can't tell you how many hard money lenders that used to lend me money at 15 to 24% are now lending me money at 8% with equity upside. Because with the tax advantages, the cash flow, the appreciation and refinance proceeds and sales proceeds, they're getting far better than an 18% return on their investment, with doing less work and letting their money just stay and play longer.
Yeah, instead of burning 1,000 deals to get to the X dollar amount, they might have to burn 500 deals, and now they got the multiple effect. Doctors,
and I can
deploy
more money than in a residential house too. In a residential house, they're at $200,000. Well, guess what? You could put $2 million or $3 million or $5 million with me into a single deal, and not have to worry about deploying the money. Like, dude, having money is not as much of a problem as not having money. It's a much bigger problem to not have money than to have money, but it is also a problem. And there's levels to this stuff of like, now I need to deploy it. Now I need to make a return on it. And it's hard to get good returns when you have big tranches of capital to deploy. So that's why you see these big hedge funds and endowment funds who are like, dude, I just need a steady 3% with no risk to principal, and I'll go and deploy billions of dollars. And that's why you see these big banks and a lot of money on the sidelines right now.
What do you think of the market now in your area? Tell people where you're kind of investing at, and then what are you doing currently, and where do you think it's going to go?
Charleston, South Carolina.
Yep.
What's that?
You're in South Carolina now, right?
Hey man, you there?
Yeah, I can hear you. You just froze, but yeah, just tell about where you buy investments, where you think the market.
Okay.
Yep. I can see you. Can you hear me? There you go.
Can you hear me okay, dude? My internet. I'm sorry, man.
Yep, you're back. So where do you live at? Where do you invest at? Market. Yep.
Yeah, so I live in Charleston, South Carolina, and this is a hot market, right? Like when COVID hit, everybody from the Northeast moved down to the Carolinas and Florida, and people talk about the market like it's the same market across the entire country or the entire globe, and that's not the case, dude. There's very micro markets in every single state, and even in certain cities and different neighborhoods in those cities. And so you got to understand where you are and where you're looking to invest. So I think the Southeast and the Sun Belt will always be hot. Populations are continuously moving there, and that's solid. Even Charleston's surrounded by like this green belt of state parks and national parks and like conservation easements and all this stuff. So like Charleston is its own little bubble on its own, in a good way if you own property here, because people can't go outside of the bubble, because then you got to drive an hour and a half to work in order to get back into Charleston after you go beyond like the green space in the national parks. So like there's different dynamics to every single market, an individual spot that you could be in. As a whole, I can tell you that obviously interest rates are going up. They're going to continue to go up because that's the government's only tool to fight inflation and to fight any sort of economic downturn in the future. And you can look at charts. There's been 5 times where the Fed has increased rates substantially in the span of 24 months over the past 50 years. Since we came off of the gold standard, there's been 5 times where the Feds have increased rates substantially in less than 24 months. And 4 out of 5 of those were followed by a substantial bubble burst or like recession. So there's the financial crisis of 08. There was a dot-com bubble burst. There was the savings and loan crisis of 87. There was something in the mid 90s, and I think there was something in the 70s. And so they obviously know something's coming, right? And this is the hardest and the fastest they've ever increased rates. And because they need it as a tool. So when shit hits the fan, and we don't know what that's gonna look like. We don't know when that's gonna be or how long it's gonna be, how long it's gonna last. But that's their only tool to combat any sort of recession. So they're gonna slam down rates again. Everybody that I talk to at a very high level is like, dude, rates are dropping again in 24 months, right? As soon as shit really gets rocky, they're gonna come down. So I'm not that concerned about rates, and I think it's gonna be a great time to buy. I mean, I can tell you firsthand, substantial difference in conversations with sellers over the past 3 weeks alone. And now people who would never even return our phone calls and tell us to go fly a kite with some of the offers that we were making are coming back with their tail between their legs, and we're going in lower now, and we're going in with better terms for us than we even offered before. And they're open to it, right? Like I got a deal right now. The guy was asking $17 million for 114 doors, and got him down to 14.6. And he's going to carry back 15% of the purchase price at 2% interest rate. I'm going to go get a loan. It still needs some lease up and some other things. So I'm going to get a bridge loan anyways, but I'm not worried about that. And then I only need to raise essentially about 15% of the money from my investors. So guess what, dude? It makes sense across the board with everyone, for my investors, for me, and for the lender or for the seller to get there or close to their price point. He's still making money on it because he realizes that his inflated values were inflated, and he's getting real value today. And I'm able to get terms on it because of what's happening in the market. So I think it's going to be a great time to buy if you understand how to raise money, or if you understand how to creatively finance. Whoever can do those 2 things is going to crush over the next 24 months.
Doing my first seller financing property, like that I've done in years, but right now, today, tomorrow, same thing. Dude. You said. Price went down. Financing terms are almost half what is on the street. Guy came back to me. I've been dealing with for 2 years. Perfect place for my family and myself. It's actually a beach investment.
Yeah. Dude, I got my house seller finance that I'm living in right now. I got my island that I bought last year seller finance at 4% interest rate, even with how hot the market was. I bought a mountain house, castle on a mountain. You saw pictures of that. Seller finance at 4%. Like, dude, seller financing is not that difficult to come by. You just need to be swinging the bat. You need to be making the offers. You need to be proposing that to the sellers. And we usually go in with 2 offers. One's a lower offer with me cashing them out in full, and one's a little bit higher of an offer with them holding terms, with them seller financing. And it makes my life easier. I don't have to deal with banks and reporting and having my head in a vice of you got to do this, you got to do that, you got to meet these certain debt service coverage ratio. Dude, as long as the mortgage gets paid, the seller doesn't give a shit. And so, dude, that's how we're making all of our offers right now, and the deals are out there. So you just got to be out there and attacking it.
What's the latest with the island and the mountain house? What's going on?
Yeah, there's short-term rentals. I was actually up at the mountain house with some friends this weekend, and dude, I bought it on seller financing. I structured it in a way that made a lot of sense for the investors, and then it gives me essentially, I could take probably up to 2 or 3 months there per year and just kind of hang out up there. I don't get up there that often, but I'm up there 3-4 weeks a year, I would say, or at least weekends. And then it Airbnbs and covers itself, so it cash flows, and there's about $3 million of equity if I decided to sell it, which I don't want to do. And then on the island, similarly, it showed like shit. They didn't cut the grass. The house was all beat up. They didn't put any money into it. It was just kind of a tired property here. Oh, you can hear me, right?
Yep.
We put new solar up. We landscaped the whole thing. and we're in the process of turning it into short-term rentals. So we're going through the process with engineering and zoning and all that stuff in order to put cabins up on the island. Did I lose you?
Nope, you're back again. It's weird. I think you're dropping.
Hey man, can you hear me?
I think you're dropping so many gold nuggets. You're crushing the internet right now. So guys, as Tim tries to get back, I mean, you can see what he's doing, and what he's done is hard work, didn't come from money, build it through mistakes and what he did well. Went out and pivoted from doing a whole bunch of things, just a couple things, then figured out that 10% of his time was working on the investing side. Why can't I scale and grow that and scale the investing side? He watched his business trajectory go like this when he focused on that 10%, made it 100%. And then from there, he learned the scalability side of investing in people. People are a better return than actually real estate investments. A lot of people, I think, have it mixed up. I think they're just as good or actually better than those investments. And a lot of times people say, you're in a real estate game. No, I'm not. I'm in a people game. I'm in the leverage game. I'm involved in changing people's lives to make my life better, their life better. And real estate is a byproduct I'm playing in that world. I was just doing a little recap, Tim, with you, with a little bit of connection, but what you were talking about today, So any final
Love
thoughts?
it, man. No, I think it's a great recap. And yeah, I mean, I would say understand what a real investment is, and dude, invest in assets over the course of the next 2 years. And number one is going to be your education. You can never take that away. You got to invest in yourself. You got to put yourself in the right rooms, and you got to be learning all the tools and strategies, techniques on how to do this stuff that will always stay with you regardless of what the market looks like. Invest in education for sure. Invest in assets, right? Like actual tangible assets. Real estate is an asset if it's managed and operated well. People are an asset. As Jeremy was just saying, if you invest in people, you will see a return on your investment. And the last one would be marketing. Marketing is always an investment. If you're marketing towards the right people, the right way, you will see, you spend $5,000 a month in marketing, you should see $50,000 or $100,000 a month in revenue that comes from that. So just make sure that you're investing in those assets, and you'll see a big return on it. And that's what the only places, those four things are the only places where I spend my money.
Thanks, brother. As always, you're unbelievable sharing your time. You're the real deal. You're a great friend. I appreciate it. I'm going to get this out. We're going to change some lives, and let me know when your next event is. I'm in, all right? We'll catch you guys later. If you want to learn more, this is what we do on a daily basis. This office, it's much more than just selling real estate. It's about building wealth and changing lives. You're not getting at your current place. You're not getting current life. You need to connect with people like us, and we'll get you into the game of investing in people and investing in houses and investing in yourself. So, all right, I'll catch you later. Jeremy Bowers, 215-370-9107. Hit me up. Own Keller Williams Philly, main line, we cleanless, realtor business, and multiple real estate investing businesses. So thanks. Catch you guys later.